Good evening and welcome to another episode of my weekly market rep. My name is Daniel Ang. Today is, of course, November the 17th, and I'm currently in Penang. And for those who attended my earlier talk this afternoon, welcome back again. And today we'll be spending some time to talk about what transpired in the past week. Of course, we knew that this is the second week after Trump claimed victory in the November 5th US presidential election, and market continues to be trading quite violently. We see that the Monday market opens at a new high for Wall Street itself, but it closes on a weak note. Now, before we go any further, I would like to remind you that this presentation is sponsored by none other than IronFX, a broker that has been around since 2010 with 180 uh, presentation in 180 countries. So they have been around the block a few times, and I'm very happy to be sponsored by them. And of course, the content of this presentation is not a offer to buy or sell any kind of securities, be it CFD, FX, or any margin products. And of course, the trading of any kind of margin products do carry the element of risk. Do understand your own risk tolerance before you attempt to trade any kind of margin products. And the opinion that I'll be sharing with you in this presentation are purely mine and has got nothing to do with the sponsor IronFX, and we will not be taking any responsibility for any action that you may do as a result of attending this presentation. And of course, this content that I'm going to share with you has not been vetted by any regulatory body, be it in Malaysia or in Singapore. So let's get started. The week itself started off with confirmation that the Republican Party has actually secured something very rare, which is a trifecta, meaning to say the same party controls the White House as well as both chambers of the US Congress. And the latest number to come in confirms that the Republican Party has also snagged control for the House of Representatives. And this has actually been one of the very few times in which one party controls both the legislative as well as the administrative branch of the office. Okay, so this is something that will be celebrated by the Republican Party because now policies of the next incoming president will see easier passage through Congress, and that will ensure that the policy will be quickly be implemented. Okay, this will be actually quite ideal from the ruling party points of view. Okay, and the first number that came out this week was the Bank of Canada deciding to hold interest rates at 2.4%. So this is no surprise. We see that, sorry, this is, I think I have a wrong heading here. It is supposed to be the Germany Harmonized Index Consumer Prices at 2.4%, and this is seen to be an uptick. Sorry about the heading here of Bank of Canada interest rates. I actually failed to change this, and my apologies for that. Let me see if there's anything else here. Thank you very much, Sam. Thank you, thank you. And again, the news that came in from Israel is that the new defense minister, remember, Galan has actually been dismissed by Netanyahu, and the prime minister of Israel has actually installed a new Israeli defense minister, a guy with the same name as the country, Israel. His name is Israel Katz, and he actually made a comment which raised the temperature somewhat. He did mention that Iran today is more exposed than ever to damage to its nuclear facilities. Now, this is suggesting that as a new defense minister, he may be very soon be targeting the Iranian nuclear facility, which is definitely a spike in the tension between the two countries. He also said that there's a possibility to achieve the most important goal, to thaw and remove the threat of annihilation from hanging over the state of Israel. So this suggests it points to the possibility that Israel may actually be targeting the Iranian nuclear facilities. Now, this will bring the conflict between the two countries to a whole new level, which will complicate any peace effort. And there is a possibility if the Israeli actually carries through with the threat to actually target the Iranian nuclear facilities, Russia will be involved. and so is Pakistan. So these are an escalation as far as we can see, and this is definitely not good for the geopolitical situation that we are facing. There is the possibility before Trump's actually returned back to the White House on January the 20th, the war may be out of control and he may have to continue to fight, or rather to support Israel in their fight against its adversary in the Middle East. So this is definitely not something that we want to happen, but if it does happen, it will ensure that Donald Trump will be out of control, in the sense that he cannot rein in Israel. Okay, considering the relationship between Donald Trump during his first term and the state of Israel, we knew that both of them are actually very tight. And if there's going to be any escalation by the Israelis, I think Donald Trump will not be in a position to actually rein in the Israelis. So this could be quite catastrophic because it will put a big spanner into efforts to bring a peace deal to the Middle East. Okay, so this is something that we want to be concerned with and look at crude oil prices. And if crude oil prices start to surge, that means this is all that we need to know, whether there will be further escalation in the tension between the Israelis and the Iranian. Okay. Now, the next number to come in is actually the labor number coming in from the UK. Over in the UK, we knew that the claimant count change has actually moved to 26,700 from the previous month of September at 10,100. So this is a lot higher, 2.5 times higher, but it is not as bad as what the market expected. Market expected a 30,500 change in the claimant count, which is suggesting that the labor market is definitely in serious trouble. And employment change, we can see that number of people have been employed in the UK. Although there was no estimates, it was already lower than the previous month of August. August, we have 373,000 bricks in active employment. For the month of September, it fell down to 219,000. So this is definitely showing us that the labor situation in the UK is getting a little bit problematic, suggesting that the economy is seriously slowing down, and they may actually prompt further cuts in interest rates by the Bank of England. We shall see. Okay. Then as far as unemployment is concerned, you can see there's a spike up from 4% to 4.3. So we can see this is quite a big sharp move to the upside, knowing that the highest the highest registered in terms of unemployment rate in the UK was 4.4%. And right now we are only that close to actually matching, if not overtaking, this 4.4% in unemployment rate in the UK, suggesting that the UK economy is definitely having some kind of labor issue. So we will continue to watch how the Bank of England will react to this. I think most likely they will be cutting interest rates to basically stem the deterioration in the employment scene. US Consumer Price Index, this is the big number that we have been expecting the entire week. We can see month over month, the headline number Consumer Price Index came in no change from the previous month at 0.2%. So this is stable, but the core consumer prices also came in unchanged at 0.3. So this is not suggesting that there's going to be escalation or there's any improvement in the inflation situation in the States on a month-on-month basis. However, when we look at the year-over-year number, this was seen to be a deterioration. The headline CPI numbers year-over-year has surged to 2.6% from 2.4%. So we can see this is not a very welcome sign. We can see that the situation in the inflation story in the United States appears to be escalating to the upside, in the sense that the prices are beginning to rebound. So will this set off a new trend in which the low in the CPI numbers year over year is already in place at 2.4%? We do not know yet. So in the following months, we will be watching this number very closely. However, the core CPI number year over year remains unchanged at 3.3%. So this is actually the good news. But however, the headline numbers is beginning to turn higher. So this is not very welcome as far as the Fed chairman is concerned. In fact, I think the Fed chairman is using the CPI numbers that we see here year over year increase to 2.6% as could be the reason to maybe halt the rate cut that we've been seeing since September. Okay, remember this month, the Federal Reserve actually cut interest rate by a further 25 basis points from the September 18 cut to to 5%. Now it's at hovering at 7.5%. So we want to see whether there will be more cuts coming in December, because we have one more FOMC before the year end is over. Market do actually price in the possibility of another 25 basis point cut in December. However, the comment by the Fed Chairman Powell himself on Thursday now give rise to the idea that maybe we may see a temporary pause in the rate cuts, because he did mention that there is nothing to suggest that he needs to cut further. So this actually caused equity markets to reverse direction towards the weekend itself. So we want to see how this is panning out, whether the new week coming up will see further deterioration or profit taking in US equity markets. In Australia itself, we can see the labor situation is not getting any better. The employment change from 64,100 has dropped to 15,900, even lower than the market expectation of 25,000 jobs being created. So this is definitely not good. Unemployment rate remains stable at 4.1%. So this is perhaps the only silver lining that we can see as far as the labor situation in Australia. We already knew that Australia is reeling from slowing down economy in terms of inflation. We have yet to see the Reserve Bank of Australia cutting interest rates, but I think they will be under pressure when the next meetings is scheduled. So there's a lot of pressure on the Reserve Bank of Australia to actually do something about the elevated prices, and the one that we will be looking at will be on the labor situation, which currently shows us that although unemployment rate remains stable at 4.1%, we can see the employment change is showing there is going to be a sharp slowdown in terms of employment in down under. Okay, Eurozone GDP, no surprise here, it remains stable. There's no change in the revision, 0.4% for Q3 quarter on quarter, and year over year it remains at 0.9%. So we can see, if you look at the year over year number, the GDP numbers in the Eurozone appears to be stabilizing. In fact, it is climbing from 0.1, 0.4, 0.6, 0.9. So it does suggest that it is stabilizing, but it is too early to suggest that the Eurozone is out of the woods. In fact, I have every reason to believe that going forward, as the European digest the implication of the return of Donald Trump, which has threatened to impose universal tariff on all imports into the America, including from the European zone, then this will lead to a total reversal in the GDP in the next few quarters. So this is a very, very real risk. And I think the threat of Donald Trump's getting everything that he wanted in terms of a tariff is going to be seen to be inflationary, and it may actually lead to retaliation by the US trading partners for eye for an eye. And if that's the case, it will lead to very, very slow global economic activity. Okay, so this is something that will be hanging over the markets come 2025. In a PPI number, which is another inflation gauge at the wholesale level, we can see that the PPI year over year has actually been rising over the last 3 months or so. The current number is at 3.1%. Market was expecting 3% from the previous month of 2.8%. So this is seen to be an escalation in the wholesale prices at the wholesale level. In fact, at 3.1%, we are looking at the highest number for 2024. So again, we want to see how this pans out, whether this will translate into higher consumer prices in the months ahead. I think there's every reason to believe that it will be, and that will suggest that the inflation story is not over, and 2025 could see the returns of inflation, and together with Trump's threat to actually impose universal tariff on all imports, it is going to fan the fire of inflation in the States, and this will have global implication, meaning to say that there's a very possibility the Federal Reserve may be forced to hike rates again to in an effort to control inflation, if this is the story. Okay, so going forward, 2025 could bring back the returns of very stubborn inflation because of what I call a perfect storm. Okay, on the one hand, we can see even before Trump returned back to the White House, inflationary pressures are building up, and if the tariff is implemented, it will definitely lead to much higher prices, both at the wholesale and the retail level. GDP for Japan, again, no no surprise here. Expectation was for a revision to 0.2% from the previous quarter, from the previous reading of 0.7. So this is a very sharp decline in the GDP numbers quarter on quarter for Q3, and it has basically undo all the goods for Q2, okay, which was at 0.7%. China, this is to be celebrated in terms of the industrial production. We see a slight downtick in industrial production number year over year. The previous month of September saw this number at 5.4%. October see only a slight dip to 5.3%, which is a bit of a climb down from market expectation of 3.6% increase in industrial production. So again, as far as factory orders are concerned, maybe the activity at the industrial level is not as robust. However, having said that, the retail sales number is very good indeed. The previous month of September saw retail sales year over year at 3.2%. Market did expect an improvement to 3.8%, but it came in so much better. It came in 1% higher than the market expectation to 4.8%. So this is suggesting that at the retail level, activity seems to be picking up, and this is very good news. Okay, if this can be continued for the next few months, it may show us that the Chinese retail sales may finally be recovering, having stuck at 2% for quite some time. Okay, so now we are beginning to see an uptick. It's definitely a relief for both the Chinese equity markets as well as the Hong Kong Hang Seng Index. We can take comfort in knowing that the Chinese retail sales has maybe perhaps turned the corner. Okay, and over in the UK, GDP again, this time we see a decrease, what we call a downward revision in the GDP number for Q3. Previously was 0.5. Okay, now it has been marked down to 0.1, even lower than the market expectation of 0.2. And at the year over year number, it's a bit of a conflict here, because on a quarter on quarter we see a drastic revision downwards in the quarter on quarter GDP numbers. However, on a year over year number, you can see that it has actually improved from 0.7% to 1%, which is within expectation. So here we have both periods showing us different results. On the quarter on quarter, which is more sensitive, we see that the GDP has been revised sharply lower, whereas on the year over year number, you can see there has been a steady climb in the GDP numbers. Okay, so there is no conclusion here, but by looking at the currency rates in the sterling, we can see that the market interpretation could be viewed to be negative, because sterling actually fell quite a fair bit this week itself. Okay, so retail sales is another number that we are also highlighting, other than the CPI numbers for the United States. And on the month over month, it came in no change from the previous month of September at 0.4%, a touch higher than the market expectation of 0.3. However, having said that, the September number was revised from 0.4 to 0.8. So the market took it very well, suggesting that retail sales somewhat is showing some robustness, and that is celebrated by, as you can see, some kind of recovery in the Wall Street itself from the climb down on Thursday. So the retail sales control group, however, is negative. Market have no expectation, but however, the revision for the month of September was revised from 0.7 to 1.2%. However, the latest number for the month of October is negative 0.1. So do not know how to make out what to make of this. Is it strength or is it weakness? But based on the control group, it's definitely a negative, because we have not gone back to negative territory since April this year. Okay, so the fact that the control group for retail sales is back in negative territory is not a good sign. So we want to see how this pans out in the coming weeks and months. Now, in the coming week itself, the calendar is relatively light. Okay, on Monday, we have no major events. On Tuesday, we have the Bank of Canada releasing their core consumer price index. No estimate here. Previously, it was 1.6%, whereas the headline year over year CPI number is expected to climb from 1.6 to 1.9%. Then on Wednesday, we have the UK consumer prices year over year. Again, no estimate. Previously, it was 0%. And the year over year number for CPI is expected to climb from 1.7 to 2.2%, whereas the core CPI year over year is expected to remain unchanged at 3.2%. So on Thursday, we have the manufacturing PMI. This time it will be the S&P global version, not the SMI version. Okay, sorry, not SMI, the IMS. Okay, then we have no expectation for both the manufacturing and the services PMI. So the previous was 48.5 for manufacturing and 55 for the services PMI. Again, but there's no estimate for this. Retail sales is what we'll be waiting to see on Friday in UK, expecting to go from positive to negative. Again, this is all pointing the wrong direction for the UK economy. Retail sales possibly may dip back into negative territory. And then on the balance of Friday, we can see the various CPI numbers, PMI numbers coming out for both Germany and the manufacturing, no estimates, previously were 43, and Eurozone manufacturing, no estimates, previously were 46, and then the services PMI previously were 51.6, again, no estimates. Then that will be followed by the UK services PMI, no updates as well, but we have the number at 52 for the month of October. Okay, there we have it. For the rest of this coming week, it's going to be relatively light. Do look out for technical trading, more or less. Okay, and I'll be sharing with you my market outlooks for the various markets. Now, remember, these are my outlooks and definitely have uh, 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 no link to what the sponsor does believe. Okay, so there we go again. Sorry. Now, again, I'll be sharing with you what is available on IronFX platform, starting with none other than equity index from the States first. Now, we have the weekly time frame. This is the weekly. We can see that prices continue to trade higher. In fact, we have an all-time high again in the Dow Jones at 44,492 and 493. But the market ends on a slightly weak note. We can see that very clearly in the daily time frame. Monday started out with a very strong uptick. Like I said, the new all-time high is traded on Monday, and the rest of the week we can see equity prices been falling back. Largely again on Thursday we have Powell making that statement or comment that he see no reason to be cutting further in terms of interest rates. So that could set the tone going forward into this coming week itself. That will possibly lead to lower prices in equity markets on Wall Street, possibly on profit taking. And if this does not descend into a massive sell-off, then I think this is possibly part of a technical correction. Okay, this is the day. This is the 4 hours time frame. You can see that market has pulled back in what appear to be a three-wave pattern, and the immediate target here is at 43,305. So this is very near to where the market settles on Friday at 43,452. So again, do not sell at this current level. Wait for a bounce. If the market complete this three-way cycle and ends here, it could possibly resume its uptrend. In the 1 hour time frame, you can see that the market has turned negative. So this is the first inkling that the market top could be in place at 44,492, because in the 1 hour time frame, you can see the market dominant trend has turned negative, and something to think about. Okay, and in the S&P 500, again, we start off with the weekly time frame. I want to show you weekly time frame is, again, market started off on a very strong note. We have an all-time high, fresh all-time high at 6,025.9. That being the high for the S&P 500 so far. And again, when we look at the daily time frame, we can see that the market opens high on Monday with the all-time high, and it has actually started to come off and a little bit aggressive on Friday before the weekend itself. So could this be setting the stage for lower prices? Like I say, in the lower time frame, markets are beginning to look a little bit toppish. Now, this is the 4 hours time frame. Let me extend this a little bit further. So we can see that we have a counter trend in place, and the market did bounce off a little bit before it closes. And what is worrying is that the 4 hours time frame, you can see the ADX beginning to climb, suggesting that the momentum to the downside is not over yet, and we could possibly see further escalation in profit taking in the S&P 500. This is the 1 hour time frame. Dominant trend remains positive, and we want to see how this pullback is going to pan out. Okay, so again, we are under a bit of a profit taking, which may carries forward into trading on Monday night itself. Yeah, when New York market opens. Then we want to look at the Nasdaq 100. Again, we will look at the weekly time frame. Weekly, we can see that the market has again registered a marginal new high. So this is a marginal new high as far as you can see. So going forward, assuming Monday high remains in place, this is what we are looking at. We have market moving into a new parameter with a new up AB in place here. Okay, the area that I'm trying to shade here in blue suggests that this is going to be an area of what you call that, deep retracement. And I hope that market do come back into this area for me to look for levels to see if I can be buying. Okay, we will see what happens. Okay, but so far, this is based on the weekly time frame. On the daily time frame, we are beginning to see what looks like to be the start of a possible profit taking, suggesting that we could be seeing some kind of profit taking and a counter trend being in place. Okay, so this can be further seen in the lower time frame. In the 4 hours, you can see the 4 hours, we are beginning to see the ADX also climbing, very much like what we are seeing in the S&P 500. So when the ADX starts to climb, it suggests that the trend, in this case, the market is coming off. This may actually continue to accelerate to the downside, very much like what we saw the market taking off during this phase here, where the ADX is climbing and it picked up at the all-time high of 21,230.9. Okay, so here we are seeing the exact reversal, and if the prices do come back and revisit the 19,900, we will see a total complete retracements of this instinctive rally on the news of Trump claiming victory in the November 5th general election. Okay, so we can see that if prices do come back into 19,900, we have seen all the gains being returned back to the marketplace. Okay, and there is the possibility we may see further downside as the ADX is climbing in the 4 hours. Okay, here in the 1 hour, we can see that the counter trend is not over yet, and it also suggests that unless the market take out 19,876 in the 1 hour time frame, we still favors the upside in the Nasdaq 100. However, if the market do take out 19,876, that it will also mean like the Dow Jones, the near-term outlook for equity markets in the States may be looking for further losses ahead. Look out for these numbers, okay? And we want to take a look across the Pacific, and this time we look at the FTSE 100. Here in the FTSE 100, again, we want to start off with the weekly time frame. You can see that the market has been very bullish, although there has been a bit of a rebound within this counter trend here, which top up at 2,800, 2,008.11. So we can see that the high traded in the this is a wrong chart. I'm so sorry. It's the wrong chart. I'm going to show you the FTSE. All right. My pardon here. This is the FTSE 100. This is the weekly time frame. The dominant trend is still very much in favor of upside. However, we knew from the fundamentals that the UK economy is definitely struggling. And going into 2025, if Trump actually follows through with his imposition of universal tariff, it will impact all trading nations with the United States, and that is definitely a negative. So where we are right now, it does look like the market is trying to digest whether the return of Donald Trump is going to be positive or negative, but largely I think it will be negative for all other nations. And we can see that it's looking a little bit toppish, in my opinion, for the FTSE 100. Whether we are able to see the same thing happening in the daily time frame, yes, we are right now suggesting that a temporary top may be in place at 8,477.3. If that's the case, then this unfolding of this pullback here may result in a large degree technical pullback, targeting somewhere between 7,723 to 7,856. This is the equality level from this high here at 8,477.3. Okay, this three wave could actually targeting anywhere between 7,007 to 7,008. Okay, so do watch out for this possible further pullback. In the 4 hours, we can see that the bounce here has been very tentative. So based on what we can see so far in the near term, there's possibility that we will see possible continuation to the downside in the FTSE 100. This is the 1 hour time frame. You can see that the 1 hour time frame has turned negative because the larger box is pink in color. We can see that the market sentiment has actually shifted to the downside with the rebound from 7,993 as seen to be the counter trend rebound. So the counter trend rebound will be quite shallow in my opinion. I think top side we are looking at 8,151 before the market lose momentum and then resumes to continue to trade downwards. And while we are talking about Europe, we want to also be looking at the DAX, which is the German index. Now, the German index, in my opinion, is one of the more vulnerable index here, because Germany, remember, last week we talked about Germany government collapsing within hours of Trump declaring victory, and this will definitely show up in the economic space here. The market tops out at about 19,681. So this, although there's no clear sign that the market has topped out, but it based on the prospect of both political instability, because if Chancellor Scholz actually do conduct a no confidence vote, I think he's likely to lose that. And if that's the case, then he will be forced to actually call for a general election in January. So January being also the month in which Donald Trump will be returning back to the White House after his inauguration on January 20th, is a lousy timing for Germany. And going into January, I would like to be more or less looking at the possibility of trading counter trend. If there's going to be further sign in the lower time frame to suggest that a top is possibly in place, I think looking at Germany may give us a clue as to whether Wall Street will be able to continue to charge into fresh all-time high come 2025. Now, this is the daily time frame. We are beginning to see that the index in the DAX here has been struggling. The top side is 19,681.1, and we can see that that high has not been revisited, and the high traded was exactly 1 month away on October 17th. So we can see prices are more or less trading to the downside, with the last 2 days of trading for the week itself see a bit of a rebound, but I think this rebound may not have legs. I think by and large, I still want to be looking at the downside in the DAX which is the German index. So we can see that the 2 days of rebound on Thursday and Friday resulted in that rebound that we see over here. Okay, I'm going to correct this. So this is the current parameter on the upside. And here we're going to see 35.72. Hang on. So we can see that the dominant trend is favoring the downside in a 4 hours time frame. However, unlike the Dow and the SM and the Nasdaq, there is no uptick in the ADX. So there is no immediate danger that the market will move aggressively downwards, unlike the Dow and the Nasdaq 100. This is the 1 hour time frame. If the market somehow goes back to trade within upwards, or let's say 19,524. Okay, this will be the darkened area in pink here. If the market can somehow go back into this bracket of prices, which is going to be between 19,524 to 19,644.7. I think there will be quite a opportune area to actually look for the positioning of short position. I'll be looking at this, and if there's any sign that I see some kind of reversal pattern in the 1 hour time frame or even lower, when the price, if and when they trade into this bracket of prices in this shaded pink area, then I will be a short. Okay, right now I have no position in the German DAX. Going forward, one of the most vulnerable index is, in my opinion, the Euro stock. Now, Euro stock is a combination of French listed company as well as German companies. We can see that it has not been trading new high. The high that we've seen here was actually traded back in March of this year, at the end of March. Okay, so we can see that for the last 6 months, no new high has been traded in the Euro stock. So given a choice between DAX and Euro stock, I think I will be leaning more towards doing counter trend in the Euro stocks, because I think it does suggest that both the French and German companies are definitely suffering as the recession bites. Okay, in the daily time frame, we can see that the larger degree retracement is not over yet. Recently, we can see the prices rebounded back as early as recent as September. So prices are now trading to the downside, with the lowest traded at 4,696.8 this recent week. Okay, so we see a bit of a rebound on Thursday, but there's no follow through on Friday. So we can see that prices are more likely to be exploring the downside rather than upside in the daily time frame. Here, the 4 hours time frame, we can see the market is still negative. The bigger box is in pink, and then this suggests the dominant trend, suggesting that it's favoring the downside. So any kind of uptick to the upside will most likely be met with more aggressive selling, and we may see lower prices in the euro stock going forward. Okay, here we have a bit of a rebound on Thursday, and this may actually continue to show up maybe in tomorrow's trading, but I think top side will be quite limited. If somehow the price of this index goes back to 4,009, okay, I think it will start to look very attractive to be trading with the trend, this time on the downside. Okay, and when we look at Europe, we also have to look into Asia itself. Asia, of course, we mean the Nikkei 225. This is the weekly time frame for the Nikkei. You can see Nikkei has not had a high since this dramatic sell-off in July. So this is still hanging over the market. We can see that the market has been holding pattern between 37,400 to 40,000. So it has not been able to break out of this range for the last few weeks, and you can see that clearly in the daily time frame. The dominant trend remains favoring upside in the daily time frame. However, I think the market has been struggling for quite some time now, not been able to register fresh highs. So this will put the Nikkei 224 somewhat on the back foot. Okay, in the 4 hours time frame, you can see that the counter trend is still very much in play. If you take this high here and this low to be the first leg of this pullback, then the high here at 40,162 may result in an equality moves, something that will go like this. Okay, let me see if I can pull it out for you. If I have to draw a expansion from here all the way to here, I won't be able to centralize it. No, that will mean going forward, there's a possibility that the market will go even lower than this low here at 37,408, possibly targeting somewhere. Let me see, where is that possible target here? I have to see. Oh, no wonder. Here, I have to change the parameter. Instead of 300, I'm going to move it back to equality, followed by 1.618. Hang on. So the nearest target for this three-wave pullback, continuing from the high here at 40,279, may target just marginally below this swing low here at 37,408, possibly to just 33,000 even. Okay, so do watch out for further losses in the Nikkei. Once the market hit 33,000 even, look out for some kind of a bounce. If the market cannot bounce, continuing to close lower and weaker, then it could end up to be not just a simple three-wave pullback. It could be something more serious than that. In the 1 hour time frame, you can see the dominant trend is solidly in the still in the phase whereby I think market is still looking for lower prices. Okay, so this is the Nikkei 225. Let me look at the Hang Seng. Now Hang Seng has possibly still looking a little bit weak on the weekly time frame. You can see that the top at 23,264 follows a three-wave pattern, which is not great for the bullish outlook here. And however, if we take a look at the larger degree, this high here being the first leg, and if we extrapolate here, we did had a marginal new high compared to 22,704, which actually minimally fulfill the requirement of a three-wave. So we have a three-wave lower degree and a higher degree, also a three-wave accumulating in a marginal high above 22,704.4, and this suggests that the market rebound is over, and we could be looking at the resumption of the larger degree, which is downside. Okay, because the dominant trend is still very much in favor of the downside in the weekly time frame. And in the daily time frame, so far the pullback has not been very aggressive just yet, but this could change very, very quickly if we see an acceleration to the downside, especially if it takes out the 16,426. In the 4 hours time frame, we can see that this counter trend here is by no means over. It could continue to trade lower, targeting anywhere about 19,000. Okay, so we have a bit more downside to go, but you can see the prices, the individual bars for the 4 hours, you can see that the size of the bars are getting smaller and smaller, suggesting one of the two possibilities. One is the market is looking to be having short-term consolidation, or the market is building a base to challenge much higher prices. Okay, this is the 1 hour. 1 hour is obviously very massively in favor of the downside. You can see that the downside negative, this dominant trend is favoring the downside, with this seem to be a marginal rebound. Okay, so again, this rebound has been very, very weak, but when you look at the risk reward perspective, the price goes back and tests the 19,387. going long may actually make a lot of sense from the risk reward perspective, so long as the price do not fall below 19,329. Okay, so if you're looking to take some short-term view, maybe taking the long side of the market may actually yield quite a bit of a returns, okay, in terms of risk reward. So we are done with the equity markets. Keep your question coming. If you have any questions, put them into the Q&A, and I will address them as and when I can. Okay. So next we'll move on to currency. And when we look at currency, we notice that the dollar has been very strong of late, something that is a bit of anti-climax, considering that the Federal Reserve has done 2 rate cuts, okay, in 3 months. And the dollar, instead of falling, is actually rising. So this is something that we have to consider, because while the fundamental is telling us that dollar should be trading lower, what we are seeing in terms of price action since the start of the rate cut cycle by the Federal Reserve on September the 18th has seen higher dollar rates instead. So here we have the euro possibility failing to match the high here at 112.75, now maybe seeing an accelerated to the downside. Okay, see the over the last couple of weeks, for the 2 weeks going into November, we can see the prices in the currency rate is favoring the dollar, very much in favor of the dollar strength. So we can see all the principal currency has been falling off pretty aggressively. Okay, so there's every possibility we may see further downside in the euro. In the daily time frame, this is the daily time frame. I want to show you the compressed version. The prices fails to take out the 112.75, now is possibly exploring to the downside. Okay, so if this is the case, I am of the view that we possibly will see lower prices going ahead in the euro versus dollar. In the short term, in the 4 hours, the market has turned negative. Okay, we can see that the dominant trend is down, and suggesting that this rebound here may not have leg. The nearby swing high is at 106.54. So if the market do see a bounce, I think this swing high here may be one area to look out for the returns of, or rather the emergence of selling interest. Here we can see that near term, a bounce is possible. But again, this bounce here does not seems to have any momentum behind it. There's every reason to believe that after a bounce, the market will lose momentum and then again resume to the downside. So by and large, I'm still very positive on dollar, considering that the market is not behaving normally on the action by the Federal Reserve to cut rates. Perhaps they are also positioning for the possibility that the Fed chairman now will be hinting that there will be no more rate cuts even in December, and that will put a floor underneath the dollar. Okay, like I said, the sterling seems to be showing the ill effect of the employment data that we saw this past week, and suggesting that the UK economy is definitely looking for harder harder times ahead. Okay, so the rebound that we see from 103.63 may have hit a temporary high at 134.34, and now we are seeing a massive return of selling pressure on the principal currency, leading to this sterling being sell off rather aggressively this past week. You can see the size of this bar here this week is actually quite big. In the daily time frame, you can see that very clearly. The market is obviously coming off, and it may continue to sell off in the coming week itself. So positioning for lower prices in sterling ahead. 4 hours time frame suggesting that the counter trend in the sterling is still very much in play. The bottom is still possibly not in place just yet. Okay, in a 1 hour time frame, the market has turned totally negative. Okay, so if you are short-term trader, just be aware that sterling in fact is across the board. All principal currency are weakening against the dollar. So we can see that very clearly in the euro versus the dollar, as well as the sterling versus the dollar. Over here, we're going to see how the market played out in the Aussie market. So this is not Aussie, sorry. This is the Cardano. I want to see Aussie. Okay. Now the Aussie is definitely looking a bit vulnerable. The market best it has ever done this most recently is 0.6973. And this is not even anywhere near the previous swing high here at 0.7178. So it's suggesting that the bias is to the downside, because the dominant trend still very much favors the downside. If the market is ever break below the 61 cent, it will definitely confirm that the market has resuming its downtrend. Again, this is another example of strong US dollars. In the daily time frame, prices in the Aussie versus the dollar has now come to a point where it beginning to make sense to do counter trend, meaning to say, no, not counter trend, to trade with the trend. Okay, because you see the market kick off from 0.63 half levels and climax at 0.6943, and now this pullback here, so long as we can see individual bars here is not very large, okay, meaning to say that the high and low trading range is actually narrowing within this bracket of prices anywhere between 0.6350 to 0.6480. I think it starts to look very attractive to be trading with the trend as far as the daily time frame is concerned, basically to suggest going long, putting a stop just below 0.6340, thereabout. Okay, lower time frame in the 4 hours is definitely looking to be very bearish. The market actually have a bit of a bounce here, but now is resuming its downside. By and large, I think there is the possibility we will see lower prices. But again, if you are a counter trend trader, you may want to know that the daily time frame now is in the position whereby it may make sense to be trading on the long side of markets. Near term, you can see that the market actually bottoms out near term at 0.6441 with a bounce here before the market loses back to 0.6443. Now you see another bounce. So most likely, if we ever see another extension of this bounce, look at the swing high here. The swing high is 0.6482. There's a possibility the next move will maybe challenge this high, perhaps even taking it up marginally before it resumes to the downside. When we look at the other currency pair, we want to look at dollar yen. Dollar yen, we can see the dollar strength is very much in play. This is the weekly time frame. However, dollar yen is a totally different creature altogether. We all knew that Bank of Japan is very concerned about the rapid loss in value for the Japanese yen, and we knew that they were in the market intervening by selling dollar and buying yen near the 162 levels. So if we see dollar yen going back anywhere back to 160, that will open up to the fear that the Bank of Japan may come in again to intervene in foreign exchange market. In the daily time frame, you can see that this move here looks like a peak has been in place. This high on Friday at 156.75 could possibly show us that the market has already topped up and is getting ready to resume. And if the next leg resumes to the downside, there's every possibility it will take out this low here at 139.58. So a new low below the swing low that we see here at 139.57 is very possible. So if this pulls back, and on the daily time frame, this is seen to be a outside bar, okay, which is very bearish, technically speaking, okay, coming within this BDR area, and we see this move here, suggesting that the dollar yen may have hit a temporary high, and it's getting ready to trade to the downside. In the 4 hours time frame, we can see that the move here on Friday was actually quite sharp, followed by a last minute rebound before the market closes in New York on Friday. But I think downside is already very much evident. We will probably see lower prices going forward. So I said I am more and more leaning to the idea that maybe the dollar may actually hit a temporary top in the dollar yen, not necessarily in the other currency, but I think in dollar yen pair, there's a possibility that a top is already in place. Okay, and when we look at dollar Canadian, are we seeing dollar weakness? No, we are not. We're seeing dollar strength. This is the weekly time frame for dollar Canadian, suggests that the dollar is trading at the year's high relative to the Canadian dollar. Okay, this suggests that the Canadian dollar is actually quite weak. Both in the daily time frame, you can see that there's no counter trend in place. The market suggests that there's momentum behind this dollar strength versus the Canadian dollars. So we have a bit of a patchy outlook here, where the dollar strength is very evident in dollar Canadian. It is also evident in dollar yen, just that in the daily time frame, we are beginning to see some kind of reversal pattern, at least in the bearish engulfing bar. Okay, and this suggests that while dollar yen may be capped, the other currency rate may still be favoring the dollar, at least for now. Now, this is the 4 hours time frame. You can see the market actually now is retesting this bottom here. Now, previously there was a price channel that had been hugging the dollar Canadian rate higher, and the market did break below this price channel. Now the price is back to challenge the bottom of this support line in the price channel, which now will act as a resistance. We will see, okay, going forward. In a 1 hour, we can't see very much. We can see that the market is having a bit of a profit taking going into Friday's trading, and we will have to take it from the maybe the daily time frame. All right, now that we've finished most of the major currency rates, we will take a look at commodities and to look at the crude oil. Now, crude oil continues to suffer from bad press. We can see there was a bit of a attempt to rally. The low $64.75 saw a rebound back to $77.92 before we lose all back this week itself to retest the $66 and I think 81 cents. Okay, so we can see that the low traded this week is this one at $66 or 70 cents. So it's actually quite a little bit lower than what I was expecting to see. So we can see that prices in the daily time frame, although the closest week, so long as it doesn't take out the $66.17, continue to favors the buy side. I have already gone long, as you can see. I'm holding on to this position to see if it will survive $66.17. Okay, so near term, the 4 hours onwards, we can see that the market has turned negative, favoring the downside. Okay, but however, I will wait for the daily time frame to be invalidated before I throw in the towel. So near term, 1 hour is also favoring the downside for now. There doesn't seem to be any strength to rebound. Okay, so near term, there is still possibility of extended weakness in the WTI crude oil. However, the market in the daily time frame now is within an area which actually beginning to looks very attractive to be doing counter trend, which is basically to buy rather than to sell. Okay. In the gold market here, we look at the weekly time frame. Gold has already peaked out as I suspected on the last day of October. The high is at 2,790.09 cents per ounce based on the IronFX platform. Here we can see that this week is also another major sell-off in the gold market here. So again, we are still looking at somewhat of a profit-taking continuing into this week. Okay, so possibility we'll see lower prices in the oil market, sorry, in the gold market. Nearest support could be the $2,431. So watch out this level, which is at the edge of the blue box here. And if price continue to go lower, this will act as a natural support area. So watch out for this level, which is at $2,731 per ounce. In the near-term 4 hours time frame, you can see that this market is beginning to gather strength, although there's a bit of a rebound going on. However, this rebound may be kept near the swing high here, which is at $2,618.76 per ounce. Okay, 1 hour time frame suggesting that we may see a bit of a rebound, but again, this level, this swing high here at 2618.75 could be the barrier to higher prices. So while we do expect a bit of a bounce, okay, but I think the upside is rather limited. In silver, we also saw silver also pulling back this week itself. This is the third week in a row in which you see lower prices in the silver market. Okay, market top up at $34.86 thereabout, and we can see 3 weeks of losses continuously, suggesting that there is possibly a temporary top in place in the spot silver market. Now, in the daily time frame, you can see that the market top up at $34.86 and has been pulling lower, and the market has already taken up nearby swing low here at $30.11. Next level to challenge will be anywhere between $27.67 to as low as $26.40. Okay, so somewhere between these two levels, there may be a bottom. Okay, so look out for further losses until those levels are hit. In the 4 hours, we can see that the losses in the silver market continues to gather strength. Each high is becoming lower and lower. Each low is getting lower and lower, suggesting near term, we are seeing a pullback in the silver market that may still have leg. Okay, in a 1 hour, we don't see very much. In fact, we see a bit of a rebound at 10. Nearby, if the market continue to rebound, it's going to be likely to be kept under this swing high here at, let me see what's the value here, at $31.14. Okay, so very little upside, but if the market do challenge this, we want to see how the market behave. Right, we have finished with commodities. Let's move on to crypto. Okay, we are continuing to see a lot of activity in the Bitcoin. Bitcoin today is still being traded. You can see that the last traded price here is at 31,000, back above 31,000. So this has been 2 weeks of very muscular rally in the Bitcoin prices. So this is the second week in a row, and it's also coinciding with the Trump's victory 2 weeks ago. So it will appear to me Trump's victory has been interpreted by traders to take crypto higher, in particularly the Bitcoin. Okay, so will Bitcoin hit 100,000? We are not that far away, honestly. Okay, it's just a stone throw away from 100,000. Over in the daily time frame, you can see the market hit a high on Monday, and very much like the equity markets on Wall Street, it has not been able to go much higher. However, we don't see a lot of profit taking. In fact, at midweek on Wednesday, we see, on Friday, we see the market bounce back up again. So again, here we are seeing a little bit of a bounce, which suggests that we may not have seen the high in place just yet in Bitcoin. In the 4 hours, you can see the market goes into a bit of a consolidation, but this could actually very quickly be erased if the market take out the high here at 258. Near term, there is no suggestion that the market has momentum. In fact, they've gone sideways for now. Top side remains anywhere between, let me see what's the level here. Top side between 92,100 to the all-time high at 83,258. If the price go back into this bracket of prices and it does not accelerate to the upside, taking out the all-time high here at 93,258, I think there is possibility of a counter trend trade. But again, this market is so strong. You may not want to consider trading the downside to this move. But if you are very adventurous, then maybe you can consider, okay? Anywhere between the 92,100 to the all-time high of 93,258 could offer a very superior risk-reward ratio if you're taking the idea of trading counter trend to the downside. So this is what we have for today. And I want to see if you have any further question. Apparently, you do have question. Let me see. Hey, thank you, Sam. I'm also glad to see you. And for Dennis, do I also look at Ripple, Solana, and Cardano? Actually, I do. Okay, these three, especially the Ripple and has been very active. So this is the Ripple chart. This is the weekly time frame. You can see that this week has been a very massive move in Ripple. Okay, and this is very positive in terms of the length of the bar itself has been very aggressive. Okay, we have a few more hours to go before the weekend ends, and we want to see how this market continue to trade. Now we have a bit of a profit taking going into today's trading on Sunday. Yesterday we saw a move to $1.26 and above, and this is the highest we have ever seen Ripple for a long time. Okay, so this could be pointing to something a lot more interesting, because you can see ADX on the daily time frame is picking up, and this suggests there is momentum behind this move, suggesting higher prices ahead. So if we do see this pullback result into a tradable environment, maybe we should be looking to buy the Ripple. And in the 4 hours time frame, we can see prices now is in between the extreme price here at $1.26 against the 64 cents. Okay, so right now we are somewhere in between. We will see. And the lower time frame, like 1 hour, is there any chance to be buying? Yes. If the market continue to pull back into this bracket of prices anywhere between 85 cents to 94 cents, I think this bracket shaded in blue does offer that possibility of picking up some long position. Now that I see this move, maybe I will be looking into Ripple as well come tomorrow. Okay, the other markets that I also do track is Cardano. This is Cardano charts. This is the weekly time frame. Again, a very strong uptick for 2 weeks. Okay, this is the second week in which you can see there's a massive uptick in prices, and the high traded this week is 81 cents. And 81 cents is marginally higher than the previous swing higher at 80 cents. Okay, 80 cents 0.8. So you can see that there is somewhat of a momentum behind this. When we take a look at the daily time frame, look at the ADX, it's getting like into a cobra position, suggesting that we may see higher prices ahead. This one suggests that there is momentum behind this up move here, suggesting that prices may be favoring to the upside in the near term. Okay, so in the 4 hours, you see a bit of a pullback from the high of 81 cents, and we may continue to see lower prices. And let's take a look at the 1 hour to see if we can get any kind of short-term possible entry. Okay, this one does not look as good as the Ripple chart because the pullback is not as sharp. In fact, we need to see prices a lot lower, somewhere between 56 cents to 52 cents, because by then it will still look right now it doesn't look very attractive to go long just yet. Okay, given the choice between Cardano and Ripple, personal opinion is that I think Ripple looks like a more possible coin to trade rather than Cardano. Now, to answer your question, Dennis, let me take a look at the Solana. Hopefully, I have Solana somewhere here. Yes, this is Solana. Again, we are trading at elevated prices for this year. These 2 weeks of movement to the upside is also seeing the starting to pick up in the weekly time frame. Okay, if you see the areas picking up in the weekly time frame, it can suggest an extended period of time in which this market can actually continue to trade to the upside. So from this perspective, Solana also looks like a possible trade. Now the market has taken out the counter trend high. So again, very, very strong markets in the, oh man, they're picking up all the counter trend trade. So Solana is looking good. Okay. And 1 hour, very, very good. So again, we are looking at very strong reaction in the various altcoin here and suggesting we possibly be looking at much higher prices. All right. I hope I've answered your question, Dennis. Let me take a look at the other questions. Suman, which one is the best currency pair for trading upcoming week? I think between euro versus the dollar to the downside, and the sterling, I think sterling offers a much better trading environment, suggesting that the momentum is still much weaker in sterling rather than in euro. If you are looking to buy the dollar instead of selling the currencies, perhaps you want to look into dollar Canadian. Okay, so those are the markets that I think may actually offers a much better play in terms of trading ranges. Sam is asking what's the reason gold dropped so fast if the Fed cut narrative still valid? I think gold is not so much reacting to the Federal Reserve rate cuts policy. Okay, obviously the dollar has been strong. This in fact, the dollar index, if you track the dollar index, is trading at the year's high. So if the dollar is strong, the correlation between a weaker precious metal prices relative to the strength in the dollar fits the scenario here: higher dollar, lower gold prices. However, I believe the gold price caps and peaks out just under $2,700 and 90 cents, not 90 cents, $2,790 is a result of idea that Trump is basically anti-war, and if he succeeds in ending the war in Ukraine, it takes away one of the catalysts for people wanting to buy gold, because gold is actually a bet against geopolitical instability. Okay. However, having said that, if Trump is able to end the war in Ukraine over, let's say, in the first few days of his return to the White House, it will be seen to be a negative for gold. However, we also knew earlier on that the new defense minister in Israel is suggesting that he may hit Iran nuclear facility, which is definitely a no-no. If that happens, I think gold prices is going to come back very strongly. Okay, so again, we have two narratives here. If the war in Ukraine dies down as a result of Trump's effort, then it will be seen to be negative for gold. But if the tension in the Middle East actually flares up, because by taking out Iranian nuclear facility, it is quite a major move. It may actually, because Pakistan has actually said that if Israel actually target and hit Iranian nuclear facility, Pakistan is a nuclear power. They may actually be transferring their nuclear weapons to Iran. Okay, I do not know. Okay, but it is definitely seen to be an escalation, and if that's the case, then I think the reason for buying gold will come back in full force. Okay, not so much in monetary policy. I think it is going to be based on whether there's going to be tension in the geopolitical arena. Okay, hopefully that will answer your question, Sam. Now, is there any other question that you want to ask me other than the question that I've highlighted and answered? No, now remember, I'm still in Penang, and tomorrow I'll be conducting a live trading session. For those who attended today's session, you knew that tomorrow I'm going to take you from concept to application. So if you happen to be in Penang, okay, do drop by. And if you want to know where the event will be held, reach out to me and I will let you know. Okay. For those who are not able to join us, and this is a physical event, unfortunately, I cannot live stream it. It is meant to be a on location event. So do come back if you happen to be in Penang. I don't do this very often. In fact, this year, this is the second time I'm doing this live trading on a physical event. The first one was done a few months ago in KL. So this will be the second one, and it will be done in Penang. I'm not sure when I will come back to Penang to do the same thing again. Hopefully, I will be able to repeat these events in other parts of Malaysia and elsewhere, assuming the sponsor IronFX is prepared to continue to sponsor these events. All right, guys, thank you so very much, and I shall see you next Sunday if I'm not going to see you tomorrow. Bye-bye. Take care.